I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Ballara, and this is the Know Your Why podcast. Today I'm here with Levi Allen. Levi is the principal of Wealth Creation Asset Management, a real estate investment company that acquires residential multifamily properties. Levi studied at BYU Idaho after returning home from a 2-year church mission in Peru. So first of all, Levi, thanks so much for coming on the show today. I appreciate you taking the time.
Yeah, I appreciate it, Jason. Happy to be here.
Awesome. Would you go ahead and just kind of tell us your background, tell us a bit about yourself and, kind of what brought you into real estate?
Yeah, so I grew up in a small town in Eastern Oregon on a potato farm and a cattle ranch. And over the years, from working and seeing others kind of career paths, I kind of decided that I kind of wanted to control my own destiny. And I didn't know what that meant, like being an entrepreneur of some kind and being a business owner of some kind. And just over the years, got into real estate, starting out with farmland. I bought a small chunk of farmland, just kind of with the help of my parents, and learned to farm that over time, and grew a portfolio of cattle, and ended up selling those, and bought 4 duplexes altogether, 8 units, which was my first apartment deal. And then I sold the land and bought a 10-unit apartment deal in Utah. And so, yeah, I bought 18 units of multifamily and just figured out that it was more easier management. The business was more scalable and just a better business model than farming and ranching. And I just decided to go kind of all in on that, and just found some mentors in the space, and over the years got into syndications and joint ventures. And I've got like just under 100 million in assets under management now. I think it's 6 or 7 syndications, 4 of which I'm the lead sponsor. And yeah, just looking to find more opportunities and make new connections in the space.
Awesome. That's unique at least for my guests. I don't know that I've had people that invest in land, but not necessarily with that, that kind of background. I've never heard it referred to as a portfolio of cattle either. But we have some good friends
I heard of cattle. I'm used to talking you probably haven't heard that because they don't say that much.
Right. We have some really good friends that have they have a farm now, and they've got cattle, and we were visiting them recently. It's funny, just like listening to him talk about the cattle and like the purchasing process and it's like, it is very much a business for sure. Like it's so without a doubt. I mean, that I think coming from that background, you're learning, the value of land, and then managing a business, all of that sort of goes together. Did you feel like that sort of prepared you, sort of propelled you towards, investing in real estate from the very beginning?
Yeah, it definitely did. I guess one of the bigger takeaways was probably trying to figure out in my new venture in real estate, how can I scale it and how can I put systems in place so it's not so management intensive? Like the cattle business, it's just very labor intensive. It's hard to find good help, and there's just so many moving parts on the day-to-day. So yeah, getting into real estate, I knew I wanted to be long-term rentals, not short-term rentals. I wanted to buy bigger properties to get good professional management in place. And so, yeah, I guess the biggest takeaway I had was just getting into the real estate, trying to, acquire bigger properties and putting the proper systems in place so that it's actually scalable and I can bring on outside capital and make it all flow better.
Right. And so you said you started with the 4 duplexes and then a 10 unit. Were those all local to you, or were you kind of right off the bat sort of investing distant? I guess.
Yeah. The 4 duplexes were local in my local town. I was able to get seller financing, so it was like just under 25% down that I had to put down. So that was nice. I didn't have to qualify for a bank loan. I just got the seller financing and it cash flowed pretty strong. This is early 2017. So it was 43,000 a unit for big 2 and 3 bedroom units. Just ran, let's see, the second deal was a bank loan. So I sold the land and did a 1031 exchange so that the proceeds from the sale of the land was my down payment for the 10 unit, which was in Utah. So I had been studying Utah for a while. It's a better growth market and just a bigger market. And I had lots of family there, visited there a lot. So I kind of knew the areas. And so that was my goal, is to grow a portfolio more in Utah. And that's what I've done more so.
And is that where your like larger deals, your syndications have been located as well in Utah?
Yes, all of them except for 2 deals in San Antonio, Texas, which we sold one of them. I was a co-general partner on both of those with another lead sponsor. And then 1 deal in Fort Worth, Texas that we bought last year, I'm the lead sponsor on. But other than that, all of the deals are in Utah. And they're more like mid-sized deals, like 20 to 50 unit type deals.
Okay. Would you talk a little bit about Utah? I mean, it's just not, I haven't heard a lot of people talking about investing. There's Fort Worth is certainly one of the more popular ones, but I do think there's definitely something to be said for some of the, maybe, I don't want to say low demand. It's not low demand, but just not the ones that are like Phoenix or Austin, places that have just exploded over the last few years, where it's extremely competitive. And I don't know about Utah, what, kind of what you're seeing there, what the opportunity is. Maybe you can kind of go into that a little bit.
Yeah, it's interesting to hear that type of perspective, because when I talk to more locals, like everyone thinks of it more as like a strong secondary market and it's highly competitive, and which it has been. But yeah, when you compare it to like a Phoenix, there's just not the amount of investment groups that are looking, and they're thinking of it more of as a tertiary market. Even though it's 3 million people along the Wasatch Front, which is running from like Ogden down south to Provo. It's about an hour and a half drive along the Wasatch Front Mountains. You got mountains on one side and you've got a lake on the other side. So it's land constrained. So there's really a lot of barriers to entry for expansion. So there's a lot of more like infill projects and just more and more high density housing that's needing to be built to support the population growth and the job growth. There's a lot of tech in. Sorry, I'm trying to get this to pull up. My screen minimized. Trying to pull it up.
Speaking of tech, doing just what you needed to at that moment.
I am not very tech savvy, but let's. I've got you on a smaller screen now. I can't get it to pull up all the way, but this works fine. Just Utah, it's a high growth market. And then with the kind of barriers to entry with the geography, I thought, long term, that's going to be a lot of potential if you can get in now in good locations, and you don't have that urban sprawl as much, like a lot of cities that are more flat and So yeah, I mean, I guess the biggest thing was I just had family in Utah and I kind of knew the areas a little bit better. So it made sense to me to pick that as a market.
Yeah. And I mean, that's what I was curious about. I think, people, there's the markets that, like, I guess, sort of tend to be the more spoken about, but I'm always intrigued by people investing in, and not that it's a middle of nowhere, but just, not necessarily top of mind markets. Cause I think there's a lot of opportunity there. So that's maybe what I'm interested in. I've heard about Utah. I've heard about people talk about Boise, Idaho, all intriguing to me because I live in California. And so they're, closer than going all the way to, the Southeast, which is also another popular area. So, what is your focus what's your role that you play in the syndication? You're playing multiple roles. Kind of, what do you really, what seat do you sit in, or seats?
Yeah, kind of all the seats now. Starting off when I was, so I invested as a limited partner, and then I co-sponsored some deals and helped raise some equity, which isn't my favorite part of the business. I'm kind of more analytical, and I like the deal sourcing and underwriting deals and working with brokers, just looking at opportunities. But I feel like it's an easier way to get into the business by first investing passively, then help raise money
Right.
for another lead sponsors deal, because it's hard to get deal flow from brokers and stuff when you don't have a track record. And but yeah, now I'm more on the deal sourcing side, and I'm starting to bring on a couple partners to help with the capital raise, as long as they're more involved with the deal as well, to keep SEC compliant. And so yeah, all the above now.
Awesome. But that's a good outline as to, a very, I don't think it's uncommon, but a very good way to kind of move your way into, more and more portions of that GP, right? You invest as an LP, see what it's like. And then, as you mentioned, raising capital for someone else's deal. There's a lot of people, they're always looking for capital raisers. It's a good place to get started, kind of get some experience, and then kind of move to whatever. But I agree with you. I'd much rather be finding deals or asset managing than raising capital. There's people that are excellent at it, and more power to them. I want to be their partners, but yeah, it's not my favorite part of it either. It's just not. I think it takes a certain personality.
Yeah, it does. And I like talking to people, but I don't love just the repetition of the same conversations. Like on the deal sourcing side, I feel like it's kind of new. Everything's always different. Every deal is different. The debt's going to be different. Everything about it is going to be different. And it's exciting to me, and just putting the pieces all together. But yeah, on the raising money side, I feel like it's a little bit more repetitive, just explaining kind of the basics to investors. And but yeah, for the right personality, that's a lot of people prefer that a lot more. So
yeah, some people are really great at it, and I think that's a good thing, because that way everybody has their strengths. You find partners with complementary strengths, and then you can kind of build even better, scale better from there. If you're not trying to do every piece yourself, it's for sure, that sort of team sport.
100%.
So what is on the horizon for you? What do you have working on anything currently? I know we're, this episode will probably come out in a month or so, but I don't think we'll be out of this current state of the market in a month. So what are your thoughts on what's going on in world economics, the debt market, that sort of, there's a lot happening. Do you have any crystal ball or ideas of what you think is going to happen?
I have no idea where this thing is going. Like if I look back at the start of the year, if you would have asked me where I thought interest rates would be and stuff, it'd be way off. Things have been changing fast, and it's hard to pencil 99% of deals. I'm in the middle of closing on one deal right now. It's a conversion. I can't tell a lot of the details about it because we're in the middle of closing it, but but yeah, we've already got the investors, so we're not accepting money or anything. But yeah, it's just buying at a little bit better basis. Our stabilized yield on cost is a little better. So with the higher interest rates, it all pencils out a little better. But like standard multifamily deals, whether it's value add or, core plus or core, it's just, the bid price from where sellers are at is there's a gap still, and it's just there's not a lot of transactions happening. And I think it's going to be probably because a lot of the bridge loans were coming out mid 2020, a lot of deals that were getting done more aggressively with the bridge loans. It was mid 2020. So most of those bridge loans are a 3-year term and 2 1-year extensions. So I think by mid 2023, those loans are going to be coming up for maturity where they have to refinance or sell, and they can't just automatically get their extension. Like there's in the loan docs, there's always, you got to look at the debt coverage ratio. You got to look, there's all these things where the lender can just decide not to extend. So yeah, I think by the middle of next year, there's going to be potentially a little earlier, there'll be a lot more kind of forced sellers. But there's still a good amount of capital ready to be deployed on the sidelines. So I don't think it's going to be anything like the global financial crisis. But yeah, I mean, like in Utah, deals that got done at the peak pricing in Q1 of this year, like January, February, March, they were closing. Pricing is off about 15 to 20% right now for a deal to get done right now. A lot of deals just aren't selling, but if it were to get done, it's already come off about that much. So yeah, it could potentially come down another 10 to 20%. But I don't know. I have no idea where this thing is going. And, the inflation data, it's slowly coming down, but the Fed can't really, even if they stop these, they're projecting a 75 basis point hike in the next meeting, and then another 50 basis point hike. And then if they even pause at that point and wait to kind of see what inflation is doing, even at those interest rates, pricing still has to come down a little bit more, I would think, before money is incentivized enough to come into the market.
Right. Yeah. I think it's definitely a very weird, sort of transition period where it's like you said, from if sellers had sold, last December or January, they would have gotten substantially more than if they sell now. And so it is really going to come down to, who has to sell. I think other people, if you don't have to sell, they're going to kind of ride it out and wait. But yeah, we don't know. I agree 100%. Like even in the spring, early summer, if you had told me that this is where we'd be now with more impending interest rate hikes, no way, no chance they would do that. Right. Like it just doesn't make sense. But here we are in as someone who is, acquiring deals in the analytics side of things, a lot of people are, talk about interest rates are up. How can you buy deals? And the reality, and you said it is, well, the prices just have to come down. They have to, it's because it's not one number in your model that dictates everything, right? It's like we pick and choose. You can reduce expenses. There are a lot of different ways to kind of adjust to account for it. But yeah, it's I would imagine that, the biggest thing is we've got this big of an interest rate hike. That's why prices have to come down 15 or 20%. Yeah,
exactly.
Yeah, well, good. I mean, congratulations on the upcoming deal. I hope that goes well and gets across the closing table with no hiccups.
We've had a lot of hiccups along the way, but it's kind of starting to come together finally. So yeah, it'll be good to get it out of the way.
Good. Awesome. Well, let me switch gears here, Levi, and ask you the questions that I like to ask every guest. And the first one is based on the name of the show being Know Your Why. But what is your why? What kind of drives you forward? What's your, kind of what picks you up towards success?
Yeah, I guess it's kind of changed over the years. The biggest one really is just to, have enough passive income that your bills are covered and that you're comfortable to where, if you want to work a job, you don't have to, a 9 to 5, you can have your, freedom of time to do what you want, when you want, hang out with family, whatever. But now I'm kind of to the next level where I'm wanting to be fulfilled. I'm wanting to be able to help other people because, once your bills are paid and you don't have to do anything, it gets boring sitting around doing nothing. So now I'm in the phase of like, okay, what can I do with my talents and, how can I help other people? How can I be more fulfilled? What's next? So yeah, I'm just kind of going into that next why.
Yeah. Yeah. I mean, and I ask every guest this question, and that's a common theme where it sort of just depends on where you are in your journey, right? Because you have definitely the why, and my why has, I don't know that's changed, but there has been additions to it as I go through it. But yeah, it's you go from a space of, okay, I'm focused on family, that sort of financial freedoms aspect of it. But then when you get there, okay, now it seems for most people, then you go into that sort of impact space of what can I do with this? What difference can I make in the world? That kind of thing. Just outside of your own, because as you said, I think like virtually no entrepreneurs just want to sit around, right? Nobody just gets to that point of financial freedom, or maybe not nobody, but very few people get to the point of financial freedom and are like, okay, I'm good. I'm just going to stop here, right? Everybody is in it because they're passionate about it and they see the potential. So then you have to figure out, okay, well, what am I going to do with that, going forward? So I think that's a really great aspect of this business. Second question for you is, tell us something about yourself that maybe isn't common knowledge, special skill, a hobby, anything you're comfortable sharing, just to let people know you a little better.
Oh, catch me off guard. I like a lot of sports. I'm really active. I like riding dirt bikes, riding jet skis, boating, hunting. So yeah, I don't know. I'm trying to think of something interesting about myself, but nothing comes to mind really.
No, that's interesting. And you sort of already, I mean, I think the farming background and having, I at least find that interesting. So I think that's kind of a cool aspect. I think in your, oddly enough, it seems like most of the people that I have met and interviewed, like they come from another, almost like an entirely different career path, and then sort of discover real estate. And so, but I think you're unique, or in the minority, maybe, in the sense that it's kind of sounds like that's about what you've always done. There wasn't, I know you were taking care of cattle, but there was always some level of, whether it's land or apartment buildings, there was some component of real estate to what you were doing.
Yeah, for the most part, for the core of kind of what I was doing, but I had some sales jobs over the years. I also got my real estate license and played in the residential space for a while. I worked for a flipping company, and it was a sales job where we bring on members and we fund their deals. So they submit deals to us, and if it all pencils out, we split profits with them.
Nice.
So yeah, I mean, I had a couple different jobs, I guess, but yeah, my core kind of business and what I was doing was always kind of real estate related.
Sure. I mean, it makes sense, and it's good. I think having that exposure, essentially, at a very young age, I think really sets you up for, because a big part of investing is time. Right, the time in the market. So it's setting you up at a young age to kind of use that time to your advantage. I always, when I talk to young people, I'm always maybe even more passionate about, yes, you need to start investing now because you can make more make more progress with smaller investments. So I think it's great to use time to your advantage.
Sure.
When people hear this and they want to reach out, what's the best way?
I guess my website, wealthcreationmgt.com, or my email, levi@wealthcreationmgt.com, or social media, Instagram, Facebook, LinkedIn. Just look me up, Levi Allen.
Okay. We'll put all that in the show notes. Final question for you, Levi. What piece of advice would you give to someone who is starting out in real estate, just to kind of get them going and motivate them, towards the success that you've had?
Yeah, I guess first you got to figure out what it is that you want, because that's going to be a different path to get there, based on the relationships you'll need, the knowledge you'll need, the amount of capital you'll need. So yeah, I guess it's, if you're wanting to get into development or flipping houses, or assuming you're wanting to syndicate kind of mid-size to large size apartment deals like me, just finding mentors and getting around the people that are doing it, getting your mindset right, that you can do it. Because that's the thing that's so rewarding about it, is there's so many challenges, and every deal has stuff that comes up, and it's hard, and you're going to want to quit. And, you're going to be looking at losing a lot of earnest money. And so just do it with a partner starting out your first couple deals. Be willing to take less profit, split profit up and split tasks up with a partner. And just make sure you have a mentor that's done it before, that's either on your team or someone that you can, turn to if nothing else, to just have them coach you through. You can do it, and just to keep marching until you get the deal closed.
Yeah, no, that's great. I actually, follow-up question to that for you, because you mentioned this. So you said, find a partner to split those responsibilities. How do you do that? How do you suggest people find partners and I think this is an incredibly important aspect in this business, because it's not necessarily likely that the first person you meet that also likes to do multifamily syndication is going to be the best person to partner with. So how do you suggest people do that?
Yeah, I don't know. That's a tough question. I mean, ideally you want to get to know them for a while. You don't want to jump in a deal with them right out of the gate. But yeah, just understanding their skill sets and yours, and if they're complementary. And then, I don't know, I've only had a few different partners over time. And what I do like about our industry is it's pretty common to do a deal together, one syndication, and see how that goes before you think about like forming a company together with a partner.
Right.
So that is one of the benefits that I feel like we have in our space, is it's pretty common to partner up and see how a deal goes before you commit to forming a company and
right.
splitting up ownership and then deciding you need to break up down the road. So yeah, I don't know if I answered that very well, but
no, I mean, that's a really good point. The reality is that, that is often how it happens, where, you may not form a company. Even if you do multiple deals together, you might not form a company together. You're just, your companies, sort of partner together on these deals. And it's true. You want to kind of see how it goes before you, sign up to do, because these are long-term deals, right? It's probably easier to get a divorce than it is to break up one of these LLCs that are involved in a deal. So it's
and I guess one other thing that I didn't really mention is, on a deal by deal basis, you can figure out how much each partner is contributing, as far as, how much time they spent on this and this, how much at-risk capital they're putting up front, how much money, how much of the equity they're going to be bringing, are they signing on the debt? So you can kind of slice up somewhat what's fair, rather than just do 50-50 and then one partner doesn't do anything and then you get a bad taste in your mouth. And so it's just a little bit easier to slice it up on a deal by deal basis.
Yeah. And important to have that pretty clearly defined too. So yes, you can slice it up, but try to be pretty objective about it, but also try to make those expectations clear upfront as to who's doing what, and as you mentioned before, complementary skill sets. So no, thanks. That was, I guess, a bit of a tangent and outside of my normal 4 questions, but when you said that, I think it's a really good point and topic for people to kind of hear about. So appreciate you accommodating that tangent. But from there, I think we will sign off. I just want to thank you for coming on the show today, taking the time out, coming and sharing your story. I really appreciate it. I think people get a lot of value here in hearing about, kind of what you've done and your success and kind of how you walked through it.
Yeah, thanks. I appreciate that. I had fun.
Awesome. All right. Well, we'll go ahead and sign out. As always, everyone, if you enjoy this episode, please like, rate, and review, and we'll look forward to the next one. Thank you.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.